Zach's Rank Buys, stocks with a short-term buy or strong buy recommendation. Now, here are more Zach's Rank Buys. A specialty retailer and a candy maker, just a couple of the growth and income stock picks that our growth and income stock strategist, Todd Bunton, has stopped by to talk about. He's written about these lately on our website. The specialty retailer is a women's specialty retailer. Chico's FAS or Chico's FAS, CHS is the ticker symbol, and I pronounced it two ways. Whichever way you pronounce it, we're covered.
Sure. Yeah, they're a specialty retailer targeted mostly at baby boomers and kind of upper middle class women.
Okay.
So they own the Chico's brand. They also own White House Black Market brands and Soma Intimates, which is sort of a boutique that they're growing. But the company's been performing really well. They definitely felt the brunt of the Great Recession back in 2008, 2009. But the company cut expenses. They kind of downsized a little bit, brought in some key senior level talent, and they've really emerged very solidly. In the second quarter of 2011, they reported same-store sales increase of 13%, very solid for this size of a company, and that's on top of growth of 8% last year. So it's a good growth story here. Analysts have been raising their estimates after the company reported better than expected second quarter results. And you can see on the chart here that they're projecting solid growth to continue for the next couple of years. Based on consensus estimates, analysts are looking at about 38% growth this year, 18% growth next year. So you got a good growth story here, but you also have a good income story. And that's really because the company has a very solid balance sheet. They carry no long-term debt, and they've been buying back stock, and they initiated a dividend back in 2010. They raised it by 25% earlier this year, and it yields about 1.5%. So you're getting excellent double-digit earnings growth, you're getting a solid dividend, and you're not really paying a whole lot because with the recent market sell-off, Chico's hasn't been immune to that, so they've dropped about 20% from their high.
Yeah.
They trade about 13 times forward earnings. Now that is in line with the industry average, but when you look at its 10-year historical median, they trade about 22 times forward earnings, so it's a significant discount to that. So if we really aren't headed for a recession, maybe just kind of a slow muddle through type growth, then this could be one to look at because there seems to be a lot of value here.
All right, White House Black Market label. I've never heard of that one. That was a new one on me.
Yeah, they're a mall-based retailer, but
oh, really?
They have about 300-400 stores, but not targeted at you, so you probably wouldn't even notice.
So resale shop for clothing from people who work at the White House?
No, nothing like that. No.
All right, and the candy maker that I alluded to at the beginning of this piece is Hershey's. HSY is the ticker symbol, and anyone who hasn't heard of this candy maker has either led a very sheltered life or is new to this country.
Yeah, absolutely. They've been around since 1894, so it's an American staple.
Yeah.
They own the Hershey's brand, of course, but they also own Reese's, York. They own Twizzlers, Jolly Rancher, so very iconic American brands.
Yep.
And you'd think, well, this company's probably struggling a little bit. Well, they've been growing fairly solid for the size and the age of the company that they are. They actually, in the second quarter of 2011, saw increases in both volumes and prices, and they've been slowly taking market share here in the U.S., so that's...
Well, they have retail stores, too.
They do, yeah. They have in more key locations.
Big
tourist,
cities.
yeah.
Yeah.
New York has one for sure.
Yep.
It's a small part of their business, but other than that, people still are spending on those impulse items in the checkout aisles, and that's been driving, like I said, volume increases, price increases, and management actually increased their guidance for the remainder of the year, and they expect to see continued market share increases over the second half of 2011. This prompted analysts to raise their estimates, sending it to a Zach's number 2 rank buy. And analysts, based on consensus estimates, are projecting 11% earnings per share growth this year, 10% growth next year. So you're getting solid growth from a very stable, solid business, and you're also getting great income too. They pay a dividend that yields 2.4%. That's higher than what you'd get on a 10-year Treasury note right now. So that's attractive, and they've been increasing that over the last several years. Actually, going back to the year 2000, they've raised it at an average annual rate of 9%. So while bonds will have a fixed coupon payment, companies like Hershey's, they increase their dividends. So if you're a long-term shareholder, that's very attractive. And if you look at valuation, they trade about 19 times 2011 earnings. That's a premium to the industry average of 16 times. But when you look at its historical average, it trades around 20 times forward. So it is a slight discount to that. So if investors are a little squeamish on what the market's going to do, if they want to buy and hold for a while and get a solid dividend along with some growth potential, this is one to look at.
And some feel-good food, too.
That's right.
Do you own either of these?
I don't.
All right. Well, you can check out more stock picks on our website, zacks.com. You want to go there often because each day they change. We put 4 new ones up there for you each business day. One in each of the investing categories that we write about. Todd's Growth and Income is included. With Todd Bunton, I'm Terry Ruffalo.